China's stock markets are some of the world's biggest, but it hasn't always been easy for investors to gain access. That could change tomorrow if a major index provider decides to include shares of some Chinese companies. Bob Pisani explains why global investors are paying close attention.
This is a big deal because indexers like MSCI rule the world since they determine what goes into all these ETFs that we're buying. Right now, only Hong Kong listed stocks are included in the MSCI indexes. There's no mainland China stocks that are in it right now. But mainland China's stock market is worth $6 trillion. That's the same essentially as the Hong Kong stock market. $6 trillion is almost 1/10 of the total stock market capitalization in the world, and it's not in those indexes. So the key issues with mainland China stocks, well, there's been a couple of them. First, it's been too easy for companies to halt trading in their stocks. Chinese regulators have now instituted new rules that limits under what circumstances and for how long Chinese companies can halt trading. There's been another issue, limits on how much that could be taken in and out of the market at any one time. But the creation of direct stock links between Shanghai and Hong Kong and Shenzhen and Hong Kong, the two big exchanges in mainland China, now make it far easier to get money into and out of the mainland stock markets. All right, so what does all this mean for investors? It means if you own international indexes through exchange-traded funds, for example, the chances are you will be owning much more China stocks in the next few years if this goes through. The inclusion will take place over several years, by the way, so indexers don't have to go out and buy hundreds of stocks immediately in the Chinese mainland market. Now, of course, there's ETFs for all this. The biggest of all, the iShares Emerging Market ETF, the symbol is EEM, is out there. But if you want more direct exposure to mainland China stocks, there are specific ETFs. Symbol KBA is one example, created specifically to track the index MSCI is using. Part of the decision may be strategic, by the way. Vanguard already uses an index from MSCI's competitor, FTSE, that it does include mainland China stocks. The symbol there is VWO. Finally, this decision comes at 4:30 p.m. tomorrow. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.